have a rental property where the tenant has moved out. I'm taking the opportunity to do some repairs and capital improvements, and uh, having a dilemma whether to uh, sell the property and do a 1031 exchange into additional properties, or if it makes sense to kind of relist the property at a higher rate for rent, specifically to kind of capture some of these passive losses from the improvements, and then potentially uh, do a cash refinance to tap into that equity to, one, pay myself back from these improvements. I didn't have a equity line of credit for this property, so wanted to essentially pay myself back for these improvements and potentially reinvest some of this equity. Or another question was that is, if I do a rental and the kind of the cash refi, if there's any concern in the time limit between that and potentially um, doing a future 1031 exchange. Do I need to have the rental property rented for 12 months, 24 months after that cash refi uh, before I can kind of do it?
Oh, it looks like we ran out of time, John. So try to keep your questions to 30 seconds or less. Otherwise, the timer will cut you off. Okay, John, I'll try to piece together, I think, some of what your concern is. I don't have a few facts here that I would love to have, which is, what is the profit here? How much has this property appreciated? Because in a portfolio of properties, like if you've got 10 properties or 20, whatever your portfolio, maybe a 5, whatever your portfolio of properties, you're always wanting to look at those properties over the years. Did you buy a C-class property a number of years ago that is now, that neighborhood has turned into an A-class neighborhood? And now that property is worth just a landslide more than you paid for it? And just the rent maybe isn't commensurate with with what you could get from sell for the property. Meaning, when you got a single family home and it's over $175,000 in value, like the rents are not going to keep up beyond that. If the home is worth 300, 400, 500, you're not going to be able to raise the rents $1,000, 1,000, in line with that value. So at a certain point, it's diminishing returns, and it just makes more sense to be able to sell that property and take those profits and then roll it into 3 or 4 additional properties that have a higher return on investment or a higher internal rate of return. So thinking through some of those things would be very important. So I would say sit back and look at your portfolio, look at this property, and are the profits significant that you're going to make a much better bang for your buck by rolling that into a 1031 exchange and picking up some brand new construction properties or so forth that you can also then get the tax benefits of from a cost segregation benefit. We have full videos here on the channel about cost segregation. So you should be able to take advantage of that from a tax perspective. Then you're also getting the tax savings from rolling it into a 1031 and then picking up properties that have a much higher internal rate of return. So I know going through a tenant turnover is always one of those moments where you're like, is this asset performing? And then what I want you to do, John, also is go back and look at be brutally honest with yourself and go back and look at the history of this property and over the lifespan of this property, like what has been the internal rate of return? And again, we have a full video here as we walk through IRR. Okay, so look up our video on internal rate of return. Like what is that percentage? And like the properties that we build, new construction, and place tenants in them for our clients, that internal rate of return is going to be starting at 18% internal rate of return. So if your number is not anywhere close to that, and if your ROI is nowhere close to that, then it's time to start thinking about the 1031 exchange, in my opinion. And yes, start to think about improving your internal rate of return. Again, it's all numbers, but your track record will not lie. And this is where a lot of investors lie to themselves. And I'm not saying you are, I'm just saying a lot, and maybe this is why you're thinking of selling it. But a lot of investors, they think they've got a great investment, and they run the numbers from the past few years, and it's been vacant for a long time, or they've got They've had a lot of repairs from bad tenants or whatever it is. And the numbers, they're just the returns that they thought they had, they just don't. And so you can really find by going back over your spreadsheets and looking at your rent, your cash flow, your taxes, your repairs, all of those things. What was your number? You know, and if it's not that high, if it's not hitting like 18%, then yeah, there's better investment. I guess my bottom line is there's better investments out there. And if you can make a pretty good bang for your buck on selling this thing, then go for it. You know, go for it and take that profit. And move it into a 1031 exchange. You know, we've got whole videos on 1031 exchanges and all of that, breaking that down for you. So sounds like you had a bunch of different questions, John. I'm trying to answer like a couple of them here, but we've got a couple of video resources here on our YouTube channel. So specifically on IRR, on the internal rate of return, and then also cost segregation analysis. Okay. So buying a new construction property as you roll that from a 1031 exchange. And then we also have videos on 1031 exchanges as well that breaks down exactly all the details and requirements for that. So I hope you find that helpful. And I hope anyone listening who is also thinking of new construction properties or thinking about how they could save on taxes, maybe you learned something from this phone call as well. And if you're ready to book a call with our team, you know, we're a full service rental real estate company. So that means we hold your hand through the entire process. From the first phone call, we want to get to understand your financial journey and plans. Like, you know, what are your goals? Are you working with an IRA? Do you have a 401k? Do you have, a veterans benefit program? Whatever it is, we cater it all to you, specifically to you. It's not a one size fits all approach. So book a free call with us. It's free. I'll jump on the phone with you for 30 minutes and hear about your goals and see if we can point you in the right direction. So just go to morrisinvest.com. That's our website, morrisinvest.com. And if you want to leave us a voicemail question for our Q&A episode, click on the little microphone tab that's down there on the right-hand corner, and you can leave us a voicemail message, and we'll answer it here on the show. Now go out there, take action, and become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.